Vietnamese Dong revaluation confirmed. A new era for global finance and Vietnam's economic future. Welcome to Iraqi Dinar RV, your trusted source for major financial developments around the world. On this pivotal day in May 2020, a transformative event has taken center stage in global economics, the official revaluation of the Vietnamese Dong, VND. This historic shift marks a significant milestone for Vietnam and signals far-reaching changes across international markets. After years of speculation, economic forecasts, and cautious optimism, the revaluation is no longer a prediction. It's a confirmed reality. The Vietnamese government, in partnership with major international financial institutions, has initiated a formal and deliberate adjustment to the VND's exchange rate. The decision reflects Vietnam's remarkable economic progress and its increasing prominence in the global marketplace. From undervalued to reassessed. Why the Dong is being revalued. For decades, the Vietnamese Dong has been viewed as significantly undervalued, especially given the country's steady growth, industrial output, and increasing attractiveness to foreign investors. Economists have long argued that the VND's exchange rate did not reflect Vietnam's true economic strength. Vietnam has emerged as a manufacturing hub and tech-forward nation in Southeast Asia. Multinational companies, seeking alternatives to China, have set up operations in Vietnam, citing a stable political environment, low labor costs, and a skilled, educated workforce. The country has also entered key trade agreements, such as the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, opening new opportunities for international trade. These achievements have fueled years of speculation that the Vietnamese Dong would one day be re-evaluated to align more accurately with Vietnam's economic fundamentals. As of today, that speculation has given way to confirmation. The new value of the Dong, a financial game-changer. Before today's revaluation, the exchange rate for the VND hovered around 23,500 to $1. Following the official adjustment, estimates now suggest the VND could reach an unprecedented rate of 0.47 to 0.50 uns per unit. To put this in perspective, 10 million VND, which was worth approximately $425 USD before, could now be valued between $4.7 million and $5 million USD. This is not an overnight market error or a speculative spike. It's a calculated, policy-driven move that has been years in the making. Vietnam's financial leaders, working closely with the International Monetary Fund, IMF, the World Bank, and other global institutions, have designed this revaluation to ensure long-term stability and international credibility. Immediate global impact. Global financial markets are already feeling the shockwaves. Trading platforms, foreign exchange systems, and institutional investment models are being rapidly updated to reflect the new reality. Banks, hedge funds, and major financial firms are reacting with urgency, revising their projections and asset allocations. Many trading systems have gone offline temporarily to integrate the new data. This is not just another monetary adjustment. It is a tectonic shift in the global financial landscape. Economists are calling this revaluation one of the most important currency realignments of the past decade. Strategic preparation. Behind the scenes. What sets this revaluation apart from others in the past is the level of strategic planning and coordination involved. The State Bank of Vietnam, with input from international partners, has built strong foreign exchange reserves to smooth the transition. Regulatory systems have been tightened, and public education campaigns launched to ensure that Vietnamese citizens understand and benefit from the change. Educational broadcasts, hotline services, and multilingual guides are being used to inform people about the implications of the revaluation and how to manage their finances responsibly. This transparency has earned Vietnam international praise, with many experts seeing it as a model for future currency reforms in emerging markets. A nation transformed. Local and global reactions. On the ground in Vietnam, excitement is palpable. Citizens in Hanoi, Ho Chi Minh City, and Da Nang have gathered outside banks and currency exchanges to witness history. Long-time holders of the Vietnamese Dong, many of whom viewed their investment as speculative or symbolic, are now facing life-changing financial windfalls. For everyday Vietnamese citizens, this revaluation means more than just a bigger bank account. It brings with it the promise of a better future, the ability to afford a home, pay for higher education, access improved healthcare, and invest in local businesses. Entrepreneurs are already making plans to expand, and tech platforms such as Momo, Zalo Pay, and Tiki are experiencing significant spikes in activity. Internationally, the Vietnamese diaspora is joining the celebration. Communities in the US, Canada, Australia, and Europe are organizing virtual forums and live broadcasts to explain the impact of the revaluation. Financial advisors are working overtime to help people navigate tax laws, investment options, and estate planning, given the sudden rise in wealth for many. Emerging market paradigm shift. Vietnam's currency revaluation is also reframing how emerging economies are viewed on the global stage. For decades, the financial world has judged these countries using outdated or speculative metrics. Now, Vietnam is demonstrating that with strong governance, economic vision, and strategic global partnerships, a developing nation can rewrite its financial narrative. This development is likely to encourage similar reassessments in neighboring countries. Laos, Cambodia, and even the Philippines are reportedly studying Vietnam's strategy closely. Additionally, currencies like the Iraqi dinar, IQD, are receiving renewed attention from investors wondering if they could be next in line for a revaluation. Challenges ahead. Managing the transition. While the revaluation brings enormous opportunity, it also comes with responsibility. Vietnamese authorities are fully aware of the risks, including inflation, speculative bubbles, and capital flight. The government has committed to maintaining financial stability through rigorous oversight, fiscal discipline, and public education. Key ministries and financial institutions have launched coordinated efforts to ensure the rollout remains smooth. This includes close monitoring of commodity prices, monetary policy adjustments, and regular updates to both domestic and international stakeholders. A new role on the world stage, with a stronger currency and expanded economic influence, Vietnam is now poised to play a greater role in regional and global affairs. The country will have enhanced negotiating power in trade agreements, greater access to international capital, and increased say in economic policy forums. Banks such as JP Chase, Bank of America, and Wells Fargo are already updating internal systems to accommodate the new VND exchange rates. Major trading platforms have experienced sudden surges in demand for the Dong, indicating global investor confidence in the change. Conclusion: a defining moment in economic history. May 2025 will be remembered as the month when Vietnam stepped into a new economic era. The revaluation of the Vietnamese Dong is more than just a currency adjustment. It is a powerful symbol of national progress, financial maturity, and future potential. For early believers in the Dong, the payoff is immense. For the global financial community, this is a wake-up call to reassess how value is assigned to emerging markets. And for the people of Vietnam, this is a moment of transformation, an opportunity to turn economic growth into lasting prosperity. The echoes of this revaluation will be felt for years to come, not just in financial statements, but in the lives of millions. Vietnam's rise is no longer a quiet story. It's a global headline.